The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Good afternoon, this is the COB, all the stuff you need to know in the day in business and markets. I'm Kyle Rutter with Danny Akuye. Danny, we've managed to string together 2 days in a row of gains.
Woohoo, we are. Currently the ASX, I have it up just over 0.5%, or about 38 points, and the CBO 200 ditto just up over 0.5% or 7.4 points.
Indeed, and I think pretty close to that 7,200 level, so psychological round numbers are
7197.
Can I give you one of my just pieces of personal trivia?
Yeah.
7197 was the high before the pandemic hit in February 2020.
God, you've got a good memory.
Well, no, I've just been traumatised. I think it's just sort of been burnt into my head. But anyway.
Well, we need our dividends if that's where we're back to.
I know. 3 years and here we are. Minus, let's have a look at them because that's where the market saw a lot of the strength coming through, at least underpinned a lot of the market strength today. Fortescue Metals rebounding 2%, so back above that $20 per share mark, despite perhaps some actually broker downgrades and the like coming through
absolutely.
After yesterday's results. But obviously the retail crowd certainly love buying the dips on that thing. But BHP and Rio also higher, South32 an energy play, despite some of the issues going on in the energy markets at the moment. Off by 0.6%. I wanted to look at the retailers though, because consumer discretionary was also where some strengths could be found.
Farmers has really been on quite a run since their results.
Yeah, fascinating set of numbers, I suppose. But you got to talk to Rob Scott, didn't you?
I did indeed.
Did he speak much about kind of just the power of being a conglomerate, I guess? Did he make much mention of that?
Yep, he did,
it's
absolutely.
Kind of like Back to the Future, isn't it? Where a lot of these companies
back in the good old days when I was an analyst and they had a conglomerate. Yeah, absolutely. What is really interesting, apart from the fact, I'm not surprised the consumer has traded down and Kmart is doing well and Target's doing well. Their new pharmaceutical business that bought, that is really big. No. The is it the Priceline Chemists? I've got to check. That is a really, really big business with a really big growth engine. But yeah, they are a classic defensive positioned company for a downturn.
Yeah, indeed. Okay, so up 3% there, $53.55. Let's get a look at another page of retailers here, and also a mixed bag. Again, the consumer discretionary sector did finish high for the day, but a little bit more mixed across retailers that we do follow. Super Retail up 0.7%, Lovisa down by approximately the same amount, Bapcor, Accent, and Nixgali as well, the latter down by 0.29%. But let's get across the three themes for the day, shall we? And well, we're getting towards the end of reporting season now. I suppose it's the final stretch, really, or the final countdown. I won't sing it for you, but only a few days away, and I guess we're all now just sort of picking through the, rubble, if you can call it that.
What do you mean, the last company's reporting?
Well, yeah, and just I suppose just digesting the results.
So I think we'll discuss in more detail with Martin, so won't dive into it, but definitely cautious outlook from companies, and they've paid out less in dividends this year compared to the profits. So looks like me they're stashing some cash away, and it could be a strategic decision, bolster the balance sheet. They might want to be able to make acquisitions should some opportunities come their way, or just general uncertainty about where the economy is going.
There you go. Also spoken already about cyclicals lift. That was the area of the market that we saw most of the strength. Consumer discretionary miners, a little bit of energy here and there.
Gold was strong today.
Gold was strong, a little less volatility across the underlying gold price after the weekend, and higher for longer. We'll be talking about that because that's going to remain a theme, despite the fact that markets seem to be fairly comfortable with that narrative for the time being. But let's get across the earnings of the day. Star rose about 5% at different stages, but did report a $2.43 billion net loss. That was driven by obviously the fines and all the costs associated with, I don't know if malfeasance is too strong a word. It's certainly some naughty behaviour, if nothing else, from the company, regulatory risks there. But the underlying earnings pulse, if you will, wasn't too bad. Revenue seemed to be fairly solid and did lift. So the stock was up by a fraction, I think, by the end of the day.
2%.
There you go, not too bad, nothing to sneeze at.
Well, there's a lot of bad news discounted in at this stage. The government, basically, state government came in and gave it, dispensation to keep the business going because they didn't want it to go under.
Yeah, right, okay. Well, there you go, there's Star's results. Tyro was another that we were keeping an eye on today. There we go, statutory net profit of $2.46 million.
That's up 14%. Sorry.
Yeah, it was a real shining light. I guess it's probably another one that sort of
had problems.
Yeah. But I don't know, maybe the hopes of the sort of dirty laundry being sort of taken out or cleaned or something of the sort, and maybe at an inflection point here for Tyro. But another company, Adbri, this wasn't a good story, if I'm not mistaken. I think the company share price was down for the day despite posting, modest lift in profit and a jump in revenues.
Down 15%. So for some reason it rallied quite strongly, over the last few months, because they have had some pretty poor announcements, but clearly the market didn't like it again. No dividend declared.
Yeah. Making sure it's sort of keeping capital spare for that Kwinana project. So
which has been so ongoing.
Yeah, right, okay.
Cost
there you go. Upgrade project over half complete. So as we said, down by almost 15% today was Adbri. Zip, always very, I suppose, friendly with us. Managed to get the CEO on earlier today and have a chat with us on the small caps.
Mm-hmm.
But another stock to rise slightly, again, beaten up, buy now, pay later. It's certainly out of vogue, what has been for some time. The results weren't stellar, but the loss was narrowed to $400 million. And the revenues were up to $693.2 million. So the share was higher, I think, by 4.5%.
Yep.
There you go.
And stock of the day was Mineral Resources. So yes, that was what we discussed.
Okay.
Yeah, well, they reported today as well.
They did report today, and I think the stock was up by about 5% in early trade. So let's get a view from our... Sorry, go on.
Sorry, almost 8%.
Wow.
Yeah. So Francesco D'Estrada we had on, as well as Michael Gable, who gave their view on Mineral Resources.
Services company as well, so there's a lot to this company, more than people I'll give it credit for, I suppose. Look, we have a whole recommendation on it at Ord Minnett, but I'd be probably a little bit more positive personally, just looking at some of the numbers that are coming out of the company. The important thing to look at from the lithium point of view is the lithium earnings for FY22 to FY23 is more than doubled. Now, I'm not expecting it to do that again into FY24, but we're still expecting a good jump in earnings out of the lithium division.
Look, share price reaction today, as I was coming into the studio, the share price was up about 6%. The volumes going through had already well exceeded all of yesterday, so it's going to be a big day in MinRes. So you've got this situation of the share price having pulled back on sentiment and a few other concerns. Technically, it was right at those levels where it peaked a few times in 2021, 2022. So this was where it needed to bounce, and it's delivered in terms of the result, the volumes coming back in. So look, I like the stock. I've been buying more of it as recently as just this morning on the back of that result. So to me, it looks like a bit of a turnaround, a bit of a relief, and I think there's more upside from here.
So I also was having a chat with Sean Hickman from Market Matters today, who was sort of talking about that, they bought Mineral Resources on a dip that they thought was sort of coming and never really materialised. But it was an interesting one because despite the fact that we had a bit of a pickup in lithium stocks at different stages, a recovery in iron ore, there was the China reopen narrative that's happened, 4 times now. Mineral Resources seem to ignore it through this whole process, but I don't know, maybe something of an inflection point here.
Well, certainly that's what the two guests thought. So it was our first double buy of the day on the call, so that was rather exciting. Yeah, they both think you can be buying the stock at these levels. Yeah.
So maybe that inflection point's here. Perhaps we'll get a view on that from our guest, Martin Crabb from Shaw & Partners, joins us at the desk. Martin, do you have a view on Mineral Resources by any chance?
Yeah, we own it in our large cap growth portfolio. I think it's, the MD Chris Ellison's done an outstanding job of building this company up to be, one of the leaders. The two commodities it's most known for, iron ore and lithium, have been in and out, obviously, as we talked about, and obviously there's an exposure to China in there, but it's worth remembering that unlike Rio, BHP and Fortescue, which have very low cost iron ore operations. MinRes is about $70 a tonne, I think, to dig it out of the ground. So they're a very marginal producer. They make lots and lots of money when we're at $100 120 US or whatever we are. As the iron ore price comes down, they'll probably get hit harder than most. So the company's done an excellent job of diversifying away from the iron ore operations. They've got a mining services business that's flying, the lithium stuff we know about, and the result was, I wouldn't say it smashed it out of the park, but it was above expectations. So a feature of mining results has been blowout in costs and management really trying hard to rein the costs in, but probably struggling. Whereas I think MinRes probably did a little bit of a better job on that front, so hence the upgrades today. And as the chart showed, the stock's down 40-50% from its highs, so it's come back a long way. And I just think, maybe it's time to put a little bit of marginal dollars. We're not favourable about the iron ore space. We think it's come a correction. We've been saying that for 4 years now, but it'll eventually happen. But I think MinRes is a good way it's kind of a good hedge way to play it. You get a little bit of iron ore, get a bit of mining services, which is booming, and then longer term you get exposure to battery raw materials, which is what everyone wants.
Absolutely. Let's switch tacks. So we had Powell on the weekend, the Jackson Hole Symposium. Is it high for longer or higher for longer?
Yeah, I think it's high for longer. So I mean, not everyone watches these things. Are a little bit dull, but I actually tortured myself on Saturday before the footy and actually watched the speech. And what I took away was interesting is that he split inflation up into 3 buckets. One being traded goods inflation, which is under control, it's coming down, tick. The other is housing services, which he said, look, we look at the market rents and they're coming down, so tick. It's the last bucket, which is non-housing services, is very interest rate insensitive. And I think they want to squeeze every drop out of that by leaving rates higher. So they realise it's not interest rate sensitive, but they need to keep rates high for longer to squeeze any juice that's left in that. So that's the bit that's wages related. So if you think it's service related industries, it's things like health insurance and eating out and all those other things, which are very wage dependent. So they're just worried about this cycle and correlation between prices, wages. So my takeaway, and the futures market certainly back this up, it's just really flattening out. So maybe we stay at 5.5 cash rates for a year. The current futures market has about 100 basis points of cuts next year from the Fed. I think that's looking unlikely unless you get a much weaker economy. And the reason the market's doing so well is the economy's not bad. It's actually holding up quite well. So I think the bond market's telling us one thing, the cash futures are telling us a different story, and then the equity market's ignoring both of them and saying everything's fine. So from an asset allocation point of view, it's really interesting about how you play this right now.
Well, that's what my next question was going to be in terms of asset allocation, because the first 7 months of this year, you could argue, has been, obviously it's just been tech related, but it's been an AI story, which, is just as much hope as it is anything else.
Yeah.
But, if we are seeing, a stronger economy and maybe we don't see a recession anymore in the United States and maybe, say higher commodity prices and what have you, is there a rotation trade in that potentially?
Yeah, I think it's interesting in that you don't need to own every stock in the market, right? So from an asset allocation perspective, I could say, look, I will give you guaranteed 4.4% on your money for the next 30 years, go and buy a US 30-year treasury, and then, but you want exposure to energy transition, you want exposure to GLP-1 drugs, you want exposure to AI, you want exposure to these other things that are going on. Buy some Eli Lilly, buy some Novo Nordisk, buy some Tesla, buy some Pilbara. So be a bit more selective. But from an asset allocation view, why would you have money in Telstra and these sorts of boring low growth companies when you can get a very stable, almost guaranteed fixed income return that's kind of looking quite attractive? Like the Aussie bank hybrid market's yielding 7%, including franking credit. So it's not like cash or anything, it's not super safe, but it's pretty stable kind of asset class. So why take the risk? Take the risk in the areas that are going to give you a really high return if they pay out. But in terms of broad asset allocation, I still think fixed income looks pretty attractive.
Yes, well, you're not the only one actually. Quite a few people are saying that as well. Maybe we could switch back to those stocks that did well this reporting season, the ones you liked, and also to it's interesting because you've got a statistic here about 2024 earnings being downgraded, all consensus forecasts.
Yeah, so the reporting season was 2023 better than we thought or better than feared, and 2024 downgrade. Like costs going up, not sure if you can pass the higher costs on. So I think we've seen consensus EPS for the Aussie market downgraded by about 5 or 6% during reporting season for 2024, and 2023 earnings, if anything, probably nudged up a little bit. So MinRes is a good example today. Stocks up 8% because their 2023 numbers were better, but they guided to higher capex, which is probably going to mean lower 2024 earnings. We'll wait to see what analysts do with that. But winners and losers. So I've got the change in the earnings forecast on one axis. So you can see over in the left-hand side, Ramsay Health Care's had a 30% downgrade to its earnings, so it's been absolutely smashed. And on the upside, James Hardie and Origin Energy, more than 20% increase in 2024 earnings. So big upgrades on the right-hand side, big downgrades on the left. North to south is the share price move. So Altium, hardly any change in earnings revision, so a little bit higher, but a massive move in the share price, over 20%. In fact, I think it was up almost 30% on the day it reported. And then on the downside is ResMed. So ResMed has been absolutely smashed. It's down over 25%, as is Block. And yet the earnings for Block actually got increased, and the earnings for ResMed only down a little bit. Maybe longer term earnings for ResMed have been downgraded, but certainly on this year's earnings. So it's kind of like Altium versus ResMed's an almost a 40%, 50% pairs trade with no change to earnings delta. So it's all about sentiment and what was built into the price going forward. So there's definitely some head scratching that's got to go on amongst fund managers about what do we do about this? Do we just sit with our Altium and our ResMed, or do we make some adjustments to the position in the portfolio? And ditto with James Hardie, it's had a huge increase in earnings, but the share price hasn't moved. I mean, that's the stock that, it's up 60% this year, so a lot of that is probably already baked in.
Yeah.
But it's just interesting to see how the market's responded. On average, we've seen lower earnings, and obviously the market's down 3 or 4% this month as well, so that's kind of tracked each other.
Martin, I do know that you love a good chart. That one was an absolute ripper. We'll leave it on that note. Martin Craig from Shaw & Partners, thanks for your time.
Always a pleasure.
Okay, let's get across the leaders and laggards now on the market. A few hits and misses on an earnings front and more. Email payments, what a ripper, up 33%. Was that just in sympathy with Tyro? We get the results out there as well.
Let me just have a quick look here. But from where it's come, this has just been a pain trade extraordinaire, to say the least. Yes, they did actually have the results out today. So obviously, there must have been some good news out of Ireland.
Yeah, absolutely. So a ripping 33% rally there, almost back to $1 per share. Tyro payments, we've already covered off, up by 12.9% for the day's trade. Mineral resources, Pilbara is just volatile, of course. I think the lithium stocks more broadly just sort of bounced after coming off quite considerably yesterday. So it remains a fairly wild ride there, although, again, I cited that discussion I had with Sean Hickman earlier on in the day, had some interesting insights around sort of, time horizons when you're looking to potentially get involved in the lithium space. Yeah. It's long, probably good value. In the short term, it doesn't look so good. So anyway, do your own research, but always a volatile space there. Codan, not too sure if there was anything there from the company in terms of driving that share price higher. Anything that you can take away?
They had their results yesterday.
Oh, okay, so maybe we can expect a few broker notes to hit our inboxes at some point in the next few days to explain that one. But let's get to the laggards now in terms of the larger companies.
Yes, Adelaide. Well, the old Adelaide Brighton, Adbury.
Yeah, we covered obviously off the news there, but investors not taking to it particularly well, off by 14.65%. And Link, its results were yesterday, also fairly disappointing, and I would imagine too maybe a few broker calls being revised there on the company, or just some follow-through selling. I think that's taking the sell-off to maybe 15% over the last few days.
It's a lot.
Off the top of my head also. Clinuvel, also down 6%. Macmillan Shakespeare, I think, actually reported either today or has done in the last few days. GrainCorp, also an interesting one too. I'm not too sure what that might be all about necessarily, but it's off by a fraction below 5%.
And just looking here, Codan, Macquarie's upgraded that on the back of the results, which were a 2% beat. So they have upgraded from a neutral to an outperform on that one, and a marginal increase in the price target to $8.20 from $8.10.
might explain that one. And it does come back to that kind of common thread this earnings season too that we've spoken so much with so many guests about, that results really causing sort of an overshooting in share prices.
Absolutely.
Here. So
huge volatility.
Sort of, I guess, take every move with a pinch of salt, maybe. But let's get across the small caps, leaders and laggards, talking about things that have the tendency to overshoot. There you go, ML Payments up 33% and Energy One also up by more than 30%. The laggards, small cap space, anything noteworthy there? Nothing out of the ordinary necessarily, but anything that tickles your fancy?
No.
Okay.
Except Melbana, I think that's a second day of being sold down, that one.
Yeah, right.
Yeah.
Okay. Off by 10%, as you can see there. All right, let's quickly get across what's on in the next 24 hours. We do have a speech from RBA Governor-designate Michelle Bullock, although that will be on the effects of climate change on monetary policy effectively, so nothing that I think we could probably take too much from in terms of what life under a Bullock reign might be like. But in the United States, we start to get some interesting data coming through in the next 24 hours. So consumer confidence, but the first batch of US jobs figures will start coming through as well, heading into these NFPs. And job openings have been so crucial, obviously, considering the labour shortages and the very tight labour market conditions that the US has been confronting. And I guess, obviously, investors and central bankers alike have been concerned about. But tomorrow, let's look at what's coming out locally. Aussie PMI, 11:30. CPI, sorry, it's getting to that time of the day. CPI, so that's not the quarterly release, obviously, the monthly release, but I believe that's expected to come down to about 5.4%, if I'm not mistaken, or thereabouts. Don't quote me on that. Building approvals, and then some results coming through. Dicker data, Flight Centre might be interesting.
Indeed, I'm chatting with the CEO tomorrow at about, it's a pre-recording, so that'll be on tomorrow, and Kelsian Group also reporting.
Yeah, okay, so another busy day. The fun never stops on ausbiz, of course.
And it looks like it's the fund managers or the investors have been doing some topping up into that weakness that we've seen in August. So the ASX 200 has actually closed up 50 points at 7,210.
How exciting! Above that round number.
0.71%, and the CBO 200 doesn't look like that is quite as firm, up 0.5% or 7.4 points, but that's what my screen's giving me. The traders or people definitely want to see that 7,200 again.
Yeah, you don't have a binary trade open, do you? Just above 7,200 payout or something like that. They don't sell them here anymore. I think they've been banned. Anyway, let's wrap things up. Again, another positive day in the market. Tuesday in the books. A lot of content from earnings season, as well as some insights from your favourite experts on the website and app. So catch up on everything if you want to. In the meantime, do have a lovely evening. We will see you tomorrow.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.